Meantime, Evercore ISI finding unprecedented bullishness among clients in its latest weekly market sentiment survey. Let's bring in Julian Emanuel, the firm's senior managing director. Julian, great to have you with us.
Great to be here.
So you were shocked by these results?
Shocked. So, look, and again, part of it is a function of the fact that contrary to a lot of people's expectations, ours included, September and October were as strong as they were. And frankly, we all know what the calendar looks like, that November and December tend to be positive months anyway. But this level of bullishness, in our mind, is a bit of a contrary indicator. Going back to 2018, the second highest reading we got when we asked what's the next 10% in the S&P 500 was 69% set up. Last week it was 76%. And frankly, when you think about the setup and you think about last week, we got a lot of good earnings news. We got a lot of good geopolitical news. And the market just really sort of didn't go anywhere at the index level. And we've got a little bit of a information vacuum the next couple of weeks and a government that's still shut down. So it's a near-term cautious setup in our view.
But longer term, you are bullish.
Absolutely. Yeah. Absolutely. As uncomfortable as owning stocks at this valuation has been, and frankly, we want to see it become uncomfortable once again. You look at the AI story, it continues to get better, and the earnings are just incredible.
So what you're saying is basically disregard some sentiment and stay in for the long haul if you're that type of an investor. But to the extent that we just got done talking about market breadth, which is narrowed almost to, a short little kind of triangle here, what does this mean? Is this part of your euphoria dynamic? Or would you be concerned more broadly about market breadth? We all know there's a headline tomorrow, and there's another one next week, and there's another one next week that's about retrofitting AI capacity and all these big boys that are already there. We know those headlines are coming. The rest of the market's not doing much.
Right. Well, so and if you look at this last couple of years of bull market, unlike the late 1990s, which we are all fond of comparing it to, you've had market breadth expand the entire time, whereas in the late 90s, it was declining for those last couple of years. And so to sort of lose that prop the last few weeks is certainly a worry. And to your point earlier, Tim, is nobody is positioned for a stronger dollar. And when that's the case, you tend to have other pain trades. Bitcoin is certainly likely to be one of those. And the entire recipe tends to be something that will likely spread the caution. Again, we're not going to have any more information until the last of the Mag 7 reports 2 weeks from now.
By the way, I don't think this is going to happen. I think they cut in December. But how problematic for the market would be if they didn't cut in December?
It would be pretty problematic. In our view, they are going to cut. We still are. Basically, if you look at the market implied probability, it's around 65% today. We think actually, counterintuitively, we'd rather see that move down to 50%, because that's when you put a little starch into the VIX and you put a little fear in people's eyes and you get your buying opportunity.
Julian, how concerned are you over the SCOTUS decision on tariffs right now? And if they rule against tariffs, does that just make you more bullish because the cuts would probably be coming?
Well, here's the problem, Steve. Do we as investors actually like tariffs now, or do we not like them?
The market likes them.
The market does like them. And our concern is probably less than an adverse ruling, because our policy people think the Trump administration will be able to find a workaround to call it 80 to 90% of the tariffs that are on the books right now, and more whether the payback is mandated, the $250 to $300 billion that's been collected. That's the kind of jolt that the interest rate market is not prepared for. Interest rate volatility is actually lower than equity volatility right now.
Going back, though, to the contrarian indicator of your survey, in the short term, do you think that indicates the bullishness, the extreme bullishness that you've seen, a short-term pullback? And if so, what magnitude of a pullback?
We don't think, again, given the seasonality of November and December, it's going to be all that incredible. You know, the 50-day moving average, which is about 3% below where we are right now, has held most of the pullbacks the last several months. But frankly, when the market is priced at 26 times and there is an element of complacency against all assets, it's probably enough, again, to create a more robust buying opportunity.